Hey, Bulls and Bears, it is Thursday, June 9th, 2022. Thank you for being here. We've got a lot of economic, financial news to get caught up on today. Back with another dose of economic reality. Let's get to it. All right, now all signs are still pointing towards economic disaster. Now, in yesterday's video where I did a walk and talk and I went up to the car dealership, by the way, I'm going to be uploading and discussing what the car dealer person had said. I had to edit that out of yesterday's video, but it's pretty interesting what he had to say. I'm going to be bringing that to you here ASAP. But in that walk and talk video yesterday, we talked about how some people, some economists had been making predictions that didn't come true over the past several years. Now, I'm not criticizing anybody. Actually, some of the people that you might have been thinking of, I think they're correct. They just haven't been proven right yet. And that's the most difficult thing to try to predict is the timing. We all know that things are messed up. We all know that this debt is unsustainable. We all know there's going to be big changes coming up in our economic landscape. The financial situation, this cannot continue. These levels of debt, the savings dropping. And I think most of you know this by now, that the economy in the United States especially is heavily dependent on consumer spending, people taking out loans, people going further into debt. And once that stops or even slows down, the economy slows down with it, and jobs start disappearing. They start vanishing. All right, let's get into the recent news here. Now, let's talk about these debt levels for consumers. Consumers, a driver of the economy with their spending. So when debt gets to be a problem, that's going to be problems with the economy in general. We're up. Annualized monthly percentage change up over 19%. And this comes out of Mish Talk, a great website if you ever want to check it out. Nice charts. Very good analysis here. And here is revolving credit. This is credit where the balance is different each month. Credit cards, for example, a new high. Now, we know that overall credit has already been at an all-time high for a long time now, over a year. But this is now revolving credit, a part of the bigger picture of debt. And now that just peaked to a new all-time high. So during these shutdowns in 2020, 2021, people got a break on some of their bills, and they were able to pay down some of their credit card debt. This has reversed very quickly. And if you look at the rapidness of this, of course, we saw the increase all the way back since 2017 on this chart, more of a gradual increase. Well, this was a huge increase. We went from shutdowns to people not having to pay certain bills, forbearance on the mortgages, the rent freeze, the eviction freeze, and now this. And if at this level, this is almost parabolic, where if this keeps going up, it's going to be straight up and down, and that's when you're going to see the bankruptcy storm. And I continue to say that the second half of this year is when you're going to start seeing the worst part of this play out. All right, now in my last report, I read a lot of your comments, and I want to thank you very much for the feedback. And a few of you had thought that I was being kind of critical on some other people that make economic type of financial type of videos. Definitely not. I really love the community here on YouTube. And I actually am in contact with some of the YouTubers that also do economic type of videos. I'm in contact with several of them because when I first started this channel, I was going to do interviews and have people on the channel. With my schedule now, I really got away from doing that, but I still am in contact with some of these YouTubers. And just about every one of them that I'm in contact with, I really like the content that they're putting out. So I'm not trying to criticize anyone else here on YouTube. Some of the people that I've seen mentioned down in comments on this channel that you also watch, people like Jeremiah Babe, awesome content. He's in a different city like twice a week. He's out doing stuff. He's out at Slab City. He's showing you the crisis, the homeless crisis. Amazing work. Jay Bravo, another California YouTuber, I think I might have mentioned here a few times. Excellent work, very entertaining, excellent news. Uneducated economist, pretty amazing. The guy just does all his work from his car, which is pretty cool that he can just talk to you from his car without having to have articles and charts in front of him. You've got Reventure Consulting. I'm not sure if that's how he says it. awesome research on the housing market. So I'm like a lot of you. I go to other channels and hear what other people are saying, and don't just listen to one person, right? Who would do that? All the different choices out there. And I'm glad that I'm one of the people that you go to. Everybody that's watching right now, thank you very much. Let's get into the next bit here of news. Now, still on the topic of consumer spending, inflation doesn't seem to be stopping the Budweiser drinker. And yes, alcohol, basically, it's a consumer staple. Anything that you can eat, drink. And when the economy gets rough and tough, people turn even more to alcohol. And we saw that in 2020 with all of the shutdowns that were happening and lockdowns and such. A lot of people turned more heavy to alcohol consumption. And when I am ready to go into some buy the dip stocks, and I don't think it's going to be now. Actually, I'm waiting for more pain in the markets. I think the stock market still has a lot of correcting to do, especially with the talk of further rate increases, right? So when the talk of rate increases slows down or stops, that's when I'm going to be beginning to look to buy the dip or to look for some sort of bottom. Because, see, a lot of the markets are forward-looking. Markets are forward-looking. And if there's still talk out there, if there's still fear of further rate hikes and further tightening, then you're likely still going to see weakness in the markets, in my opinion. But when I do see a bottom, I'll let you know, and I'll be here to talk about it. And consumer staples that pay out dividends is the ones I'm going to be most interested in. And if you look at a lot of these dividends from big beverage companies and food companies, a lot of them are greatly outpacing what you'll get in a savings account. I was looking for savings accounts that paid out interest, and it was still less than 1% annual percentage yield, and that's ridiculous. Some people still put their money in there to get that little bit of a payout because it's something that people that really don't invest do. They put it in the savings account, checking account that pay interest. It's better than nothing, but definitely looking for opportunities to put the money to work. But cash is still going to be the main thing. We talk on this channel about how the dollar is getting devalued. Yes, when you look at rising prices, it is devalued, but it's still the place to be. Cash is still king. Over the past few years, we had people out there like Ray Dalio talking about trash is cash. That was a quote. And cash can be scary to hold on to when you see prices rising, when you see all these returns that people were getting. But now after this correction, this should have been a wake-up call for a lot of people with the markets dropping. And if you don't have some cash and the buying opportunities come along, it's going to be kind of sad. You say, oh, look at all these great deals, and now you don't have any cash. Cash is still king. It's not going away tomorrow. Over a long-term view, yes, I think cash is on the decline. The dollar is on the decline, but the dollar is still dominant. Most of the world's trade is still in dollars. Most of the debt throughout the world is denominated in dollars. It's dollar denominated debt. Cash is still king. So yes, cash, still hold on to cash, still have cash. I'm not saying not be diversified. Do have precious metals, do have some other holdings that are not cash. And if you're able to proceed, if you're able to navigate in this economic situation that's headed our way and still have cash, still have money on the side, you're going to be one of the very few people, because the cost of living is continuing to dish out punishment and people are depleting their savings. And when buying opportunities get here, you're going to be one of the few that has the ability to buy. So continue to crunch. I'm continuing to look for ways to save as much money as possible. In our household here, we've definitely cut back on forms of spending. Here's an example. Instead of getting SeaWorld tickets and season passes to the zoo, which we've done in the past, we've got little ones in the house, and they're always asking for that type of stuff. We went out and got a trampoline. So instead of paying like $400 a year for these season passes, we've got a kind of a big trampoline for our yard. It's about 10 foot, and it's about $280. And that's going to last us more than just 1 year. It's more than just a season pass. It's going to be several years and cheaper than just one season pass for the whole family to the zoo or SeaWorld. So that's just one example of what we're doing to try to get in a better position for the dangers, the economic dangers, the financial situation that's headed our way. Hope you guys enjoyed this news briefing. economic report. Stay well, stay safe, keep stacking, keep preparing for the financial storm because it's coming and it's dark. Big love, everybody. Bye for now. Peace.